Hi, this is Jim. I hope you're having a great day, and I'm going to run you through a few markets we're in. Cocoa, we got long over here. I held it up to here, and I pulled the stop up a little too close. We got stopped out here, but we didn't miss much of the rally. And then now we're short cocoa. I think we're going to have a counter trend correction. If cocoa does trade higher and puts in another buy signal, we'll turn around and go long. So cocoa, we took most of this bull swing. We're short, and we'll go long if need be. But I think we're gonna hold short for right now in cocoa. Um, Natural gas was another good trade we did. And again, they're not all winners. I certainly don't want to try to say that. I have my share of bad trades, but I mean, I'm doing my best, and I think you'll be happy with the trades overall. That's the big thing in trading. You got to look at the overall picture. Natural gas, we took this whole big swing up. We didn't go short, but I think this is a counter trend correction. I think with the stochastics down here, I think this market's going to turn higher. We're going to have a buy signal. Nice thing about natural gas is there's a mini contract on it, so that helps. I trade as many mini contracts as I can to help keep the risk down. So like if you take the premium newsletter and I trade a market that's a higher risk market, that's just too big a trade, like say if I put out a coffee trade or something, just don't take that trade. Wait for some of these mini contract trades to come in, because there's plenty of them. Now lean hogs, I had a short trade out if it broke this support level here. That's why I always say in these newsletters and in my videos that these entry points are very important part of the trade. Well, we didn't get entered into this trade in the last 2 days. Lean hogs has traded bullish. So now I may have an entry point to go long tonight, or it might take another day. Again, I have to look at the numbers. But if lean hogs continues higher from here, we'll be looking to go long. Now, if it were to turn back lower, we'd probably be going short. So anyway, lean hogs, I'm going to have a trade here pretty quick on lean hogs. Right now, it's looking like it'll be a buy trade. It'll be in tonight's newsletter or maybe the next couple days newsletter, depending on market action. Beans, we're long right now in beans. So what I do is I get in a position, and if it doesn't move our way, we usually stop and reverse, which really works out good, because usually if you're wrong on your direction on the trade and you turn around, a lot of times that will be the way the market's going to go. So we do a lot of stop and reversing. We do a lot, I mean not a lot, but I mean there is some stop and reversing, let me put it that way. Soybeans, we went long 3 bars ago here on a break of the 4 bar high here. Now it looks like soybeans are going to head higher, but it's running into resistance here, so this is another one. If it moves our way, then we'll just hold it for as much as we can. I really plan on this being a big trade to the upside right now, but if it turns around and starts heading lower, we'll get out, we'll go short. But right now I think beans look good to the upside and we're long. Gold, I actually think we're going to have a short trade. Again, I got to look at the numbers a little more to make sure. I got a system I go by, and it's got to be an exact setup, and right now it looks like gold, but I look at some other indicators and different things, and gold will probably be going short either today or tomorrow, maybe if it's another down day tomorrow. And the nice thing about gold is there's a micro contract, which is $10 an ounce. So you can really take these gold trades for fairly low risk, considering commodities are going to be a little riskier because the contracts are bigger sizes. So gold, you can really trade gold for fairly low risk. And I think I got a good trade coming up pretty soon in gold here. We're going to go short. What I think gold's going to do is come back down and test this low here. So the low here was 1320 basically. Right now it's at 1420, so that's a $100 move in gold just to come back down and test this low. The dollar, I actually could have gone long the dollar a couple days ago if I would have really been aggressive on it, but I wanted to see a couple more days action just to confirm. But right now, with today's action, I think this confirms it. So we'll probably have I'll probably put it in a little buy stop up here tomorrow, and we'll put a sell stop down here. Now what I do is I put the stop on the trade, but I don't always wait for that stop to be hit. If we were to go long the dollar, and then if I were to have the stop like back here, but then if the dollar were to start breaking lower and put in a sell signal, we just stop and turn around and go short. So a lot of times these stops won't even get hit before we'll get out of the trade. We take it day by day on a closing basis. Right now I think it's pretty obvious that the dollar's heading higher. So tonight I'll probably have a buy signal on the dollar. Again, I'll have to look at that again. So that's kind of a wrap up. We'll look at one more. This is a good market again. I like these lower risk markets because, just for a lot of traders, it's just these, some of these trades are just too big. Like I said, if I put out a coffee trade and that's just too big for your account, just skip that trade. Just don't take it. And I try to get as many mini contracts as I can. Like natural gas has a mini contract, gold has a mini contract. The grains have mini contracts. That's what we're in beans. We're in a mini contract. So there's some pretty fairly low risk trades. I'm considering commodities are expensive to trade because the prices are so high in them. I mean, they're a lot more expensive than they were like when corn was $1.50, $2 a bushel. Now it's $6 a bushel. Of course, the stops are gonna have to be a little bigger, so it's a little more expensive to trade. Now oats, this looks like it might be making a triangle here, or you could look at this like a bull swing up, and then this is a bull flag correction, and I think we're going to be going long oats if it moves higher from here, which I think it's gonna. And again, if it were to break lower, then we just go short. But right now, I think oats is going to be to the upside. And here's one last trade I got out right now. I forgot about this one. Orange juice. I had a buy stop out today to go long, but it's an inside day. It looks like, so I don't think no, that trade didn't get triggered today. So I'm going to go long again tomorrow. We're going to put a buy stop up here and go long orange juice. And I think orange juice could get up to 170 on this next swing up if that all plays out as expected. So I'm going to have a trade out for orange juice tonight, tonight's premium newsletter. If you want to get that, again, the entry points are extremely important in these markets. So because it keeps us out of bad trades. Like I showed on that lean hog trades, I was going short, and then it didn't get triggered, so now we're considering going long. So you got to get the right entry point and the right stop. So for $99 a year, the premium newsletter is a steal, and please give it a try. Thanks, Jim, ProfitTrading.com.